Hey YouTubers, Christopher Wanamaker here doing a new category YouTube video on auto insurance and fine-tuning your own personal auto insurance, getting into the details, the descriptions, and the discounts. So you know what exactly are you paying for, no matter who you get your auto insurance from, whether a bank or some other agency. I'm going to go into the details of auto insurance in general as a whole. Why am I doing this? Well, knowing that with our economy, inflation and everything, even though it's starting to get better, that everything's going through the roof. Food and gas prices and all that. So it's kind of like my quarterly per year digging through my monthly budgeting and trying to fine tune my monthly budgeting by contacting different businesses, companies, agencies to look into, hey, things have gone up in price. What can I do? Is there anything I can do to get a better rated plan? For example, a couple months back, my Verizon, phone bill per month was going from about $75 a month up to $95. And so I contacted them. I tried to find out, hey, this is the plan I have. Are there any newer plans? Is there a better plan that would fit me where I can decrease price even if it was by $5 a month? And they're like, no, for when it comes to the Verizon My Plans, the different plans under My Plan, then you're at the lowest. The only other thing that you could possibly do is switch from one of the My Plans to prepaid. And then I would go from $95 down to $55 per month. So this is pretty much the overall same concept of, more recently, 6 months ago or so, I started digging into my, auto insurance. And I don't just pay auto insurance. I pay $161 per month through my bank, USAA, for both auto insurance, which I believe covers a little over $125 a month of the $161. And then I also pay for renter's insurance, which is like a little over $34 a month. And then for a little over $2 per month, I pay for covering my firearms insurance. So if they ever got like stolen or whatever. So combined all together, paying firearms insurance, renter's insurance, and auto insurance, I pay $161 per month, or about $80.35 every 2 weeks. Before it was a lot more than that. It was after about a year or so, knowing if within your region area, they will slowly keep increasing what you're going to be paying per every 6 month term. And the reason is for how many people are on the roads driving uninsured or get in accidents and they're uninsured, or how many are even insured but they still get in accidents, how many speeding tickets, dealing with natural disasters. All these different category topics are why everybody's auto insurance keeps going up and up and up. So so with that, you have to kind of be more due diligent in digging into the details of what are you paying for, how much are you paying, do you really need it at that high of a rate? And so we're gonna, look at all the different insurances, my coverages, what do these all mean, and everything. And then we're even gonna go into a little bit of credit score information as well. The first thing I'm gonna do is I'm gonna grab the phone, the tripod, and show you on my TV screen a CNBC news report of why car insurance rates are skyrocketing in the U.S. That was from 5 months ago. And this will give a lot of details, go over the coverages, the different reasons and categories and topics, and the variety of reasons why auto insurance is going through the roof. So we're going to watch that first, and then we're going to switch over into my different auto insurance policy and coverages and the details of those.
But there are other factors impacting car insurance rates too. Cars are becoming costlier to fix, and American drivers are becoming more reckless. In 2019 and 2020, There were an average of 3.8 million emergency room visits for injuries from car crashes annually in the U.S. The following year, more than 6.1 million motor vehicle crashes were reported to the police.
Everybody's got a story about something crazy that they saw on the highway, or just more people driving around, texting on their phones and things like that.
Motor vehicle crashes cost Americans an estimated $498 billion in 2021. So what's really behind the spike in auto insurance rates? How do insurers set that rate? And what impact are rising premiums having on consumers and the large publicly traded companies like Allstate, Progressive, and Berkshire Hathaway's Geico? Dawn King lives with her husband and 2 daughters in suburban New Jersey, an area with limited public transportation. With 4 full-time workers and 4 cars, the family has faced an uphill battle paying for car insurance in recent years.
In September of 2023, I got a renewal, and it went up to about $3,100 for 4 drivers, 4 cars for 6 months. I just got my renewal policy last week, and it went up again, and I'm now paying close to $3,900 for those same 4 drivers and 4 cars.
Mandated by the government, most states require some type of car insurance to drive legally. New Jersey saw its full auto insurance premium rise 45% in 2024 from the year prior to $2,555. Americans on average spend 3.4% of their income on full auto coverage.
My car and my oldest daughter's car are the 2 expensive ones on the policy because they are leased vehicles. The car insurance company requires a higher coverage on those vehicles.
We're faced with the decision of if we actually even contact our insurance, because it feels as though when something does unfortunate happen, we have to then deal with the penalty of actually filing a claim and then having to now pay even more on top of the increased premiums that we're already getting.
In an attempt to lower her rate, King took a self-defense driving course, downloaded an app to monitor her driving, and was advised by her insurance agent to run a credit check.
If things continue, it's pretty hard to deal with because it then puts us at a point where we have to decide, okay, well, how little coverage can we actually get by with if it keeps costing more and more?
As a family who is just a middle-class family who's struggling to make ends meet with everything that has increased since the pandemic, I feel like we're kind of at a loss on what to do.
With fewer drivers on the road and a decrease in accidents at the start of the pandemic, auto insurers refunded customers billions of dollars in April and May of 2020. But as supply chain issues mounted and inflation rose, those insurers faced increased costs for everything from spare parts and labor to litigation and car rentals.
So we went from an environment of prizes for consumers where they're receiving a check in the mail or an electronic deposit from their insurers to they get a renewal notice for their auto insurance policy and they're seeing 10, 20, 30% increases in their premium.
By 2022, private U.S. auto insurers were facing their worst underwriting results in more than 2 decades. The top 10 car insurance companies represent more than 75% of auto policies in the U.S.
The last 2 years, auto insurers as a whole have lost money writing auto insurance because the cost of paying claims and other underwriting costs are greater than the premiums they're bringing in.
The combined ratio, a measure of profitability used by insurance companies to gauge their performance, is calculated by taking the total of incurred losses and expenses and dividing that by the earned premiums. Anything over 100% means an unprofitable year.
So having a 112 combined ratio by 2022 was absolutely horrible. And some companies did a lot worse than that.
Inflationary headwinds weren't the only challenge insurers faced in recent years.
At that point in time, 2016 and 2017, use of iPhones just took off in the car. And a lot of accidents occurred as a result. There was also driving while under the influence of marijuana. It shows that these insurance companies need to be vigilant, right? Because if they're not, you could end up in another situation like 2016 and 17, or a horrible situation that we've seen in the last 3 years. So they really, when you think about it, they really need to get the price in order to be profitable.
To slash their overhead, insurers trimmed staff and cut back on their ad budgets. Farmers Insurance laid off about 2,400 people, or 11% of its employees in 2023. Geico slashed its advertising spend by $800 million to $1.2 billion in 2022 from the year prior, or a 38% decrease. But it was higher premiums that had the biggest impact on the insurer's bottom line. In 2023, most large auto insurers increased their rates by double digits.
In the past about 12 months, we're in an environment now where essentially all insurers have aggressively increased premiums. And that has led to an environment now where the consumer, the insured, is out shopping for auto insurance and finding that they cannot get an insurer, they cannot find an insurer that has a lower premium for them.
I knew there were going to be price spikes due to inflation, and in the wake of the pandemic, there were some supply shortages, repair costs have gone up, so there was going to be something. But the insurance companies have taken it way too far, and the prices that we're seeing right now are really out of scale with the cost of inflation.
In an email to CNBC, Allstate said, "We provide affordable coverage and help customers save money with discounts like bundling and products based on how they drive, like DriveWise." According to analysts, with their margins improved, insurers like Allstate and Progressive could be entering a new phase of growth.
You're starting to see year-over-year improvement. Most books are not quite profitable yet, but they're on the path.
While your vehicle type and driving record have a major impact on your auto insurance rate, not everyone pays the same amounts. New Yorkers with poor credit, for example, were found to have been charged almost 3 times the amount as residents with excellent credit.
Other than in California, Massachusetts, and Hawaii, where it's illegal to use credit scores, if you have a low credit score or even just a fair credit score, a 650, 700, you're going to pay a lot more for auto insurance than somebody with a very high credit score, even if you have a perfect driving record. In fact, in most states, with an excellent credit score, you can have a drunk driving conviction and still pay a lower rate than a good driver with a poor credit score.
Insurers say drivers with good credit are less likely to file insurance claims.
They don't use your credit score, but they use elements of your credit score. It's called a credit-based insurance score. And it's proven to be one of the most predictive things of whether or not you're going to have claims and auto insurance costs.
Other socioeconomic factors that push up rates for lower income drivers include having a blue-collar job versus a professional title, lacking a college degree, being single, divorced, or widowed, or renting versus owning. Your home address is also a factor. According to a 2015 report, insurers charge premiums on average 70% higher to drivers in predominantly minority communities compared with drivers in non-minority communities.
I think it would help consumers to remember, in most cases, your auto insurance premiums are not being set at an individual level. They're being set based on a group of people that are similar to you.
Around 215 million Americans own auto insurance. The market is valued at roughly $353 billion in 2023. As insurance premiums have spiked, so too have the number of uninsured drivers. While estimates on the number of uninsured drivers in the U.S. vary from as little as 5% to over 10%, the number appears to be increasing.
If you're making a decision between paying these higher premiums that you might see a 10, 20, 30 or greater % increase in your premium payment to your auto insurer, and you're deciding between that and paying other bills that are coming in, putting food on the table, etc., a greater share of consumers than in the past have shown that they're willing to drive uninsured.
Driving without insurance can trigger severe fines, impounding your car, or even jail time. It also makes it more expensive for insured drivers. But it is the increase in auto deaths that has safety officials most concerned. While the death rate for crashes in the U.S. has fallen about 90% from its 1920 levels, over the past few years, the number of fatalities has increased. The amount of traffic fatalities in the U.S. increased more than 16% from 36,000 in 2018 to an estimate of over 42,000 in 2023. Increasingly complex dashboards, bigger and heavier cars, the opioid epidemic, and the legalization of cannabis may all be contributing factors.
When there are more crashes and when the cost of those crashes are more, that means the costs are higher. That's the base of what we all pay.
Another trend alarming car safety advocates is the volume of people texting, scrolling, or glued to their mobile device while behind the wheel. Distracted driving, which includes cell phone use, eating, and talking to other passengers, claimed more than 3,500 lives in the U.S. in 2021. U.S. drivers in general spend almost triple the amount of time looking at their mobile phones while driving than do their UK counterparts. Improved safety features in cars may be giving drivers the false impression they can spend less time focusing on the road. But what can drivers do to save money on auto insurance? Bundling your home and auto insurance can save on average 14%. Other tips include increasing your deductible, maintaining good credit, shopping around for better rates, and paying your annual premium in advance.
All right, now we're going to go into the details of my personal insurance, of what do I pay and what are all the details of the different coverages, what do they mean, and all that kind of stuff. So I have, my bank is USAA. I've had it for a little over 16 years. And then, so about 5 months ago, before I started, fine tuning, digging into the details of what I'm exactly paying when it comes to auto insurance, and all that, this 6-month premium was at $864. By doing all the details and everything, fine tuning everything, digging into the details and everything, it dropped from the $864 to $682. So it saved me quite a bit of money. And then, of course, over the past 5 months, once I hit a new 6-month policy term, then it increased by about $70 from $682 to $752, about $70 increase. But of course, this right here is not just my auto insurance for 6 months. This is also my firearms insurance coverage for 6 months, and it's also my renter's insurance for 6 months as well, which adds up to right now for a full month, $161 a month. So here's a basic overview. One of the very first things that I had to do is edit my miles driven per year. Now, when I was a rideshare driver, 2.5 years Lyft, and then switched over 2.5 years Uber, I was putting on anywhere from 50 to 60,000 miles per year. And so I edited it, and then I'd be paying a higher amount of auto insurance per year. And that's according to, I was using a Mile IQ app to track my mileage for being a rideshare driver for 5 years. And it helped me to take that information of what how much was personal mileage and how much was business mileage, print it off, and give it to my tax accountant. So one of the very first things I did is I, stopped driving for rideshare at the end of January 2023, and then so I had to not only get rid of my rideshare driving insurance, not pay for that anymore, but also change how many miles do I actually drive now. Now that I'm an at-home full-time caregiver for my disabled mom with MS. And so, the average is about 12 to 13,000 miles. I went ahead and put 12. By the end of 2024, I'll have a better idea of how many actual miles did I do for a whole year not driving for rideshare. And my insurance, premium started massively dropping. Now the big difference, like between 12,000 and 13,000, so 1,000 more is it was like $9 difference. So at 12,000, it was like 69, about 70. I was very close to $70 a month. And if I switched it over to 13,000, it'd be about $79 a month for auto insurance. So that's the very first thing, is unknowing what is about the average that you drive per year, and plug that in. That's the very first thing. The next thing, then we start getting into the actual many different types of insurance that you're overall paying for. So right here, vehicle coverage and deductibles, comprehensive insurance. And what this is covers damage caused by something other than another vehicle, such as hail, theft, or collision with an animal. 5,000 limit may apply to custom equipment, and glass replacement may be subject to your deductible. This other one down here is comprehensive loan coverage. And what this pretty much is this is for hail, theft, or collision with an animal. And it's pretty much total loss of vehicle to cover remainder balance of auto loan if vehicle value is less than the amount on the auto loan. So for a hypothetical example, if I still owed $15,000 on an auto loan, but yet my car now, because of the condition and mileage and all that, is at $12,500, there's a $2,500 difference there. And then if I still owed money on an auto loan, I would have comprehensive loan coverage. I'd pay a certain amount for that, a certain 6-month premium, and which means that I would have that coverage. So if something happens to my car, and I still owed money on it, what is it worth compared to what do I still owe? That loan coverage covers that difference. So, and then for the comprehensive insurance, your deductible is $1,000 per occurrence, and I pay $64.81 per 6-month term. Collision. Covers damage to your vehicle caused by impact with an object other than an animal. And then I chose $1,000 per occurrence for my deductible. 6-month term premium is $212.05. Collision loan coverage, which I don't have because I don't have an auto loan anymore. But that pretty much is for impact with an object that's not an animal, so probably like a tree or a sign or something. Total loss of vehicle due to an accident. It's very similar to gap insurance, but I don't have that because my vehicle's auto loan is fully paid off and I own the title to the car. Uninsured motorist property damage. This is if an uninsured or underinsured driver damages your vehicle. My bank will help pay up to $100,000 per accident. My 6-month term premium is $17.17. Car replacement assistance. I do not know if many other auto insurance companies or banks do this, but my bank does. If your vehicle is declared a total loss, we'll pay you an additional 20% for a 6-month term. I pay close to $59. So what this means is if, depending on mileage and condition of the car and all that, let's say it's my car, not too long ago, a few thousand miles ago, it was worth $12,500. And so an additional 20%, which would be an extra $2,500. So for a $12,500 valued vehicle, I would get $15,000 for it for a replacement. Liability coverage. This is bodily injury liability. If you hurt someone in an auto accident, we'll help pay up to $100,000, but no more than $200,000 per person per accident. My 6-month term premium is $118.65. And then property damage liability. If you damage someone else's property in an auto accident, we'll help pay up to $100,000 per accident. My 6-month term premium is just over $94. Now I'm going to switch over real quick to a little lawyer short clip video from a lawyer from the East Coast who talks about the bodily injury liability, what this $100,000, no more than $200,000 per person per accident actually means. He's going to break it down for us. So let's switch over real quick.
Somebody has a minimum auto coverage in Georgia. That means you have 25,000/50,000 coverage. I want to talk about what slash means because that's important. $25,000 per person, $50,000 per incident. What that means is if there's one person in the car that gets injured, your insurance can pay them and protect you up to $25,000. If there's 2 people in the car, each person can get $25,000 for a total of $50,000. If there's 3 people in the car though, when you cause a crash and you have 25/50 minimum coverage, that means one of those 3 people can get $25,000 and then the other 2 would have to split a remaining $25,000. They could all get $10,000, they could all get $15,000, but no one person can get more than $25,000. All the people involved can't get more than $50,000. In your typical passenger car situation where someone is seriously injured, there just isn't enough insurance.
So that's what that means to help describe what this actually means in simpler terms. So moving on, injury coverage. Uninsured motorist bodily injury. If an uninsured or underinsured driver injures you or your passengers, the $100,000 per person, $200,000 per accident, pays $62.89 for a 6-month term. Personal injury protection. If you or your passengers are injured in an auto accident, will help pay up to the amount shown below. For all of these down below, I pay 6-month term $82.78. Medical expense will help pay up to $50,000 per person. Funeral expense will help pay up to $5,000 per person if you or your passengers die as the result of an auto accident and need assistance for funeral expenses. Income continuation benefits. If you or your passengers lose income as the result of an auto accident, will help pay up to $700 per week, up to $35,000 maximum. That's for 50 weeks. A loss of service benefits. If you or passengers are injured in an auto accident, will help pay up to $280 per week, up to a maximum of $14,600, which is 52 weeks worth, so a whole year's worth. Accident forgiveness. When you purchase accident forgiveness, the premium surcharge will be waived for the first future chargeable at-fault accident. Requirements may vary by location. How to earn accident forgiveness. Earn accident forgiveness by keeping an accident-free driving record with USAA for 5 years. Once you've earned accident forgiveness, you will receive it without paying an additional premium. This feature is included because you have kept an accident-free driving record with USAA for 5 years. So it's included, so I don't have to pay any kind of premium. If I got in an accident, I'd have to pay some kind of premium to have accident forgiveness until, of course, for 5 additional years, I don't have any other further accidents, and then once again, I'd get it for free. So right now, I have it for free. Rental reimbursement. Pays for a rental vehicle while yours is being repaired due to a covered loss. Economy class, maximum 50 days, and for every 6 months, I do have a term premium of $33.85. Towing and labor. Provides emergency roadside assistance such as towing, flat tire changing, and delivery of gas, and I pay $7.20 for a 6-month term. When I did drive for rideshare, I was paying for rideshare gap protection, which extends coverage when you are waiting to accept an assignment from a transportation network company like Uber or Lyft. So what that means is if I paid for it, I would have coverage when I'm just, sitting at a parking lot or I'm cruising around. I don't actually have a fare in my vehicle. I'm just waiting until I receive a pickup request, and then I go to them. The whole time I don't have a passenger in my vehicle, that's when this rideshare gap protection insurance covers me. Otherwise, when I do have a fare, then I've hit the button saying I've accepted it, and the fare has started, then the rideshare company has their own kind of insurance while a customer is in my vehicle. So now we're going to get into, when it comes to the comprehensive and collision coverage, what this pretty much is that the details of what right now I pay. A current selection is $1,000 deductible, and for each, and I pay $10.80 for the comprehensive, and then for the collision for a 6-month term, $35.34. So if an accident happened, I would have to pay $1,000, and then they would cover all the rest. So I'm showing the difference of if someone is still in a decent amount of debt, then they're more likely to do this of choosing like a $50 coverage or $100 or $150 or $200. They're going to choose a lower deductible amount, so that way you have to pay less when an accident happens. However, the thing is, the monthly premium is going to be more, usually 2 to 3 times more. close to just under 3 times more for this, and about double, little over double for this. So what that means is if you still have a good amount of debt, you're not either 100% debt free or very, very close to being 100% debt free, you're going to probably choose the lower deductible amount of like $50 to $100, but you're going to be paying more per month for your coverage. But then when you're either 100% debt free or very, very close to it, then change your lower deductible to a higher deductible. So like a $500 or $1,000 deductible, if you can afford it. And so, knowing that I'm 100% debt free, car's completely paid off, I've got emergency money off to the side, so an accident happened, I can afford a $1,000 deductible, which I'm paying way less, 2 to 3 times less per month for. So there is a great little hint, tip, and trick that I didn't know about until several months ago, and I hope that all of you will now know and look into and play with it of what can you actually afford. Okay. The next thing is going into pretty much applying for your discounts. So USA has this, different things that I applied for. Does your vehicle have a vehicle recovery system with an active subscription? I have the Verizon HUM, HUM system, but unfortunately because it's like a detachable chip, it's not built in. So that way they can track it down if it gets stolen. It's not low jacked. If it had a built into the engine low jack beacon, then I'd be able to say yes and get an extra discount. But I do have a GPS locator system, which is also a like a microchip that does a diagnostic on the vehicle, the Verizon HUM system, but it can be removed easily. So that's why I cannot put yes for that. I verified with them. Does your vehicle have daytime running lights, which are lights that as soon as I turn on the vehicle, those lights are on at all times. They cannot be shut off, which I do. It allows it for, I don't have to exactly have my headlights on, my full headlights. If, it's heavy rain, snow, fog, whatever, the daylight's already on. So I do get a discount for that. What type of airbags does your vehicle have? Driver and passenger front and side airbags and all that. And so I get a discount for that. So I start answering all these questions. And then here are some of the discounts and savings of what I get. Automatic payment plan for signing up for that, paperless billing and all that. What a lot of people don't know is it actually costs these businesses money to send people paper bills for the letter, the paper, the ink, all this kind of stuff. And so they're actually charging you a little bit more for what you pay for different utility bills and all that. When you go auto pay and paperless billing, it saves you anywhere from like about $5 to $15 per utility bill. So since I'm signed up for automatic payment plan, auto pay pretty much, and also paperless billing, I get $19 off. Daytime running lights, $6.15 currently for my 6-month term plan. Passive restraint discount, I get $14.12 off per 6-month term. And then as of 5 months ago, I took part learning about like that DriveWise app and everything. Well, USA has something similar to DriveWise. It's USAA, what was it? Auto Safe or Safe Pilot. That's what it is. A USAA Safe Pilot. It's pretty much DriveWise. And so after like 300 miles of driving and monitoring my driving and all that, has 4 major categories of like, am I using a hands-free phone device in the car? Am I holding the phone? So is it handheld phone use? And am I on speakerphone or whatever? And then also harsh braking. On average, nearly every month, out of 100 points, I get about an 84, 85 score on average. So for when I signed up for that Safe Pilot, I automatically got an additional 10% off my auto insurance policy. And then I can get up to another 20% on top of the 10%, so 30%. If I get, every month I have 100 points, perfect score for the Safe Drive app. So, but I'm getting 84, 85 average. So altogether, I'm averaging like a 24, 25% discount from the past 5 months, and that's just under $73 a month off my auto insurance for having that app, downloading, signing up, and using it. So it's tracking, monitoring, how many unsafe acts am I doing with my phone? Am I holding it? Am I calling someone? Am I answering a phone call? Either am I holding it in my hand? Am I moving the phone while I'm in the car? Or am I using a hands-free Bluetooth device? But I'm still talking to someone, so I could be distracted, or am I harsh braking as well? So, but altogether, for signing up for all these, I get a discount of $112.20 for a 6-month term. Then additional things: USA membership savings, which I've been a member for a little over 16 years, payment history, multiple USA products, length of membership, military service. That's an additional $668.41. You combine that with that $112.20, that adds up to the $1,533, what I would pay if I was a normal civilian person, didn't sign up for all this stuff and dig into it and get all these discounts. So my policy savings is $780.61, and so out of $1,533, I'm paying $752.41 for a 6-month term, and that is both for auto insurance, full coverage of all those different kinds of insurances. That covers my weapons insurance and my renter's insurance. You divide that by 6 months, and that's pretty much $161 a month, or $80.35 every 2 weeks. One other thing we're going to go into, because they said credit score is important, I'm going to show you this. Experian.com. This helps me monitor my credit, the different 3 credit bureaus. How good am I doing? What would happen if I missed a payment on something? It has a lot of details, so let me show you this. So as you can see, my Experian credit score, and if you're not aware of this, depending on what kind of a financial application, loan or something that you're trying to apply for, will determine whether are they focused on Experian, Equifax, TransUnion, are they looking at 2 of the 3 or all 3? The more amount of money that you're trying to pull, so like a higher loan would be a mortgage loan, they'll probably look at all 3 credit scores and everything, and your payment history and all that. So as you can see, my Experian is well over 800. My Equifax is pretty close, and so is my TransUnion. In the next 3 to 6 months, end of November to end of February, these should get bumped up to well over 800. And then what this also does, as you can see, the score ingredients, an overview of all the factors impacting your FICO score, payment history, which I have exceptional, amount of debt, very good, that's 30%, length of credit history, 15%, very good, amount of new credit, 10%, score exceptional, credit mix, 10%, very good. When I went from one credit card, applied for a second one, this went from exceptional down to good, so right in the middle. Then slowly over time, as it got closer and closer to having that newer credit card for 1 whole year, it went from good to very good to exceptional again. And I've had it for a little over 2 years now. So one other thing that it does is using Credit Boost, which is this right here, goes into different categories. I'm able to link up any different bank accounts that I have, whether I have one or multiple, to Experian, and then they review everything, and then all my rent, utility bills, all of that, they verify that I've had them for 90 days or more, and that I'm consistent with the payments, and that'll give me a credit boost. And that is this right here. So at one point in time, I went from a 794 in mid-July 2022, and then shortly afterwards, about 10 days or so later, I went from a 794 to 44-point increase, 838. Now, of course, I screwed up with something because I paid off my auto loan, went from 2 revolving forms of credit down to 1, and it went from 838 and it dropped down to 809. Applied for a new credit card to have a second form of revolving credit again, and it started dropping even more in the 90s and all that. So, so that's something to be aware of. Once you hit 2 forms of revolving credit, you will always need 2 forms of revolving credit. That's important to know. And then because of my high credit score, especially with Experian, which if I went through my bank to apply for a new credit card or even have them pull a hard copy of my credit to say increase either of my 2 other credit card credit limits or even apply for a new credit card, then they would be looking at this. For credit card applications, all of my scores are above 800. For auto, and because they pulling credit is mainly Experian, Equifax and TransUnion is for other things. So I have well over 800 for each of those, and then mortgage over 800 as well. So I would all be in the 800s for any kind of loan or credit card application through my bank. So another thing you can do with this is, another good one would be you can lock Experian Credit Lock. Review your reports, unlock your Experian credit file. What locking your credit does is make it where if you're not going to be applying for any loan or whatever, you lock your credit so someone can't steal your identity and stuff. That prevents them from doing all that. And then right before I look at possibly applying for a new credit card, an auto loan, a personal loan, a student loan, a mortgage, looking at increasing one of my credit card credit limits, I would have to unlock this so it allows them to pull a hard copy of your credit, whether you once or multiple times. And then when you're fully done with all that, you sign the loan, you got the money, then you need to go back and lock your credit accounts again as well. So then the last thing I want to do and show another great thing this does is a FICO score simulator. And what this can do is, so it's saying that by the beginning of the new year of 2025, by January, I'll go, it's an estimated that my Experian credit score will jump up an additional 5 points. But then what happens if, one of those people and I forget to pay a bill? Then that would affect my score by as a simulation of a drop 100 points. Don't pay any of my bills. Become a hermit and just avoid being responsible. It would drop my score from 818 to 653, 165 point decrease. Declare bankruptcy, 295 simulated points, so it would go from an 818 to a 523 simulation. Miss a payment by 90 days, decrease by 145 points, so 818 to a 673. Apply for or have something go to collections, would affect it by 105 points. And apply for new credit. So like this is showing me that here in the near future, I might apply for a new credit card. But if I also wanted to, it says 1 inquiry, 2 inquiries, it still only drops by 5 points. But if I want to do 3 inquiries, it drops by 15 points. So that means that here in the near future, as soon as this jumps up to the 823, I can apply for a new credit card. And one of my lower credit limit credit cards, I can also apply for an increase, and I definitely will qualify with over 800 credit score. And by doing 2 different inquiries, it only dropped by 5 points. And then within a couple of months later, that inquiry will drop off. So then my credit score will go from 823 back down to 818, and then probably 4 to 6 months it'll go back up to 823. And so that is a great thing to know on how to start looking into and fine-tuning your credit scores, and knowing your credit inside and out, knowing the details, locking your credit score, looking at the details of if you miss payments, what could it do to you, and tracking what your actual full credit score is, and it gives you all the hints and tips. So, why do we use FICO scores? It can tell you, like, let's say amount of new credit, off to the side, amount of new credit. When considering your amount of new credit, FICO scores take into account how many new accounts you've recently opened and whether you've been rate shopping for a single loan or applying for multiple new credit lines, opening several new credit accounts in a short period of time indicates greater credit risk. And then new credit, that's my new credit card that I got a little over 2 years ago, about 25 months ago, so it's tracking all that. So this helps give someone great power over their credit accounts. So something to look into. And then this updates every 90 days. So another about 78 days, and they'll be able to report refresh, and Equifax and TransUnion possibly might increase. So pretty much other than that, I would say, this overview just helps you to better understand auto insurance, the different details, the different policies, how can you fine tune it, how can you apply for discounts, how can you do like homework research so you understand your auto insurance better. I've worked with FEMA and Red Cross while in college and while deployed to Liberia, Africa, helping out with the Ebola outbreak at the end of 2014 beginning of 2015 as a quartermaster logistical supply sergeant for the United States Army. And I did research papers in college with both FEMA and Red Cross on the subject of emergency preparedness management. And what two of the major statistics that I learned from them was they did a 5-year joint survey on Americans and preparedness, and the results came out in August of 2015. And the two major statistics that they discovered was, at that time, over 60% of Americans do not prepare for natural disasters in any way, shape, or form, even though over 80% of American counties get hit by one or more than one yearly natural disaster. And then the other major statistic was for every $1 someone spends in preparedness planning, products, or both, you will save yourself somewhere in the realm of $4 to $16 in damages and recovery fees. And since the pandemic happened, inflation has taken off, I would actually say that's increased. Instead of $4 to $16 range, I would say that's about $8 to $32 for every $1 someone spends in preparedness planning, products, or both. So it's one of the old saying, it's better to have and not need than to need and not have. The more you prepare, the less stressed, worried, exhausted, stressed out, concerned, fearful, you are. You're more mellow, you're calm, you're cool, you're collective. Your emotions are not overpowering you and overpowering your brain, using logic and reason, staying calm and cool in bad situations. So, pretty much thinking ahead, getting into the details, doing your homework, fine-tuning your monthly, monthly budget is all very important if you want to be better and better with your finances. And the more homework you do, the more money it will save you. Give an example. One time, I came back from Afghanistan, back to my duty station of Oahu, Hawaii, and I planned a 2-week vacation on the island of Kauai. And pretty much if I would have done no homework, no research, no phone calls asking questions about discounts and combining different activities and all this other kind of stuff, I would have, if I just showed up on the island of Kauai, paid for everything at the front desk, I would have spent $5,500 on all the activities and food and everything that I did. By doing my homework beforehand, calling and scheduling and combining things and asking about like military discounts or whatever, I saved $4,000 and spent $1,500. So that is a prime example. So other things you could do, it's one of those things of you gotta spend money to make money. Would be like hands-free devices within a vehicle, especially for your phone and stuff, especially if you're going to use like DriveWise or Safe Pilot or something like that. Would be like, phone mount kind of stuff. Put your phone in here and collapse it down, and then so it hooks up to a vent and all that. So this is from Amazon, Vicseed, Vicseed. It's a great high quality but not super expensive phone mount. Another type would be like a window suction cup kind of thing. This is a universal ball head basic suction cup arm for phone, so you can take this and attach it to the side driver's side door window or even the windshield or whatever, wherever you want, so you can place it wherever if you don't want to use vents. And then one other thing I do is to keep my phone charged, especially when I was a rideshare driver for 5 years, was I'd have one of the little like cigarette lighter USB plug into your car, and then I would get a USB a charger port that's plugged into USB, but then it has a it's a tri where it's a micro, C, and iPhone, and they're adapters, and so that's for my phone is a C. So whether I'm charging my phone or a customer's phone, I have extra accessory components for both myself and my customers as well. So use hands-free devices so you're not touching your phone, moving around, especially if you're taking part in one of those safety apps, driving apps, so that way you can hopefully get discounts on your insurance. So that's about all I have for this video. I hope it was informative. I hope it helps you to want to dig into your own auto insurance, and it helps you out and helps you look into saving money and learning what you are paying for and what you need and what you don't need when it comes to your auto insurance, and understanding your credit better. I do not know when it comes to Experian.com. I don't believe that Equifax and TransUnion are doing something similar as Experian.com does, but Experian.com is great and something I would sign up and start hooking up, go to Credit Boost, hook up your checking accounts and all that, and so they can see your history of paying rent, paying mortgage, paying utility bills, and that will help increase your credit, as long as you're one of those people like me who stay on top of paying all your bills on time and consistently. So and set up paperless billing and auto pay for everything as well. That'll help you save some money as well. So great ways to fine-tune your monthly budgeting and save money a little here, a little there, and it all adds up. So I hope you enjoyed this. And we're running into fall of 2024. So everybody have a good holiday season. Stay safe out there, and I hope you better your financial future. All right. Happy holidays, and take